understanding the technology that powers the money is essential. Knowing the business drivers that inspire how the money is made is crucial. Bridging the gap between the mind of the technologist and the mind of the business is monumental. That is what TBF is all about. Let's start this never-ending conversation. It's time.
Happy Friday. Welcome back to another episode of the Tech Behind FinTech. Really excited today. I have my guest, Hossein Rahnama. How you doing, Hossein? How are you today?
Good. Thanks for having me and looking forward to our conversation, Nnamdi.
We will be discussing navigating AI adoption in banking strategies for success. It's going to be a really live discussion about AI, and we're going to go into different things. So before we do that, let me just knock out some housekeeping. We are streaming live from Facebook, LinkedIn, YouTube, and Twitch. We are the Tech Behind FinTech, live every Friday. We also have a stream going from Instagram. So my Instagram folks, when I turn this way, it means I see you. So without further ado, let me introduce my guest. Let me read his bio, and then we'll get into the topic for today's discussion. Hossein Rahnama is a professor at the MIT Media Lab and Toronto Metropolitan University. He's also the founder and CEO of Flybits, an AI/data science company. His research is focused on the design of human AI systems, data governance for generative AI, human-computer interaction, and the system design of data-driven applications. He has published more than 40 papers and holds 23 patents in computer and data science. He previously served as a council member at the NSERC, National Science and Research Engineering Council of Canada, and is currently on the board of directors of Home Capital Group and Canadian Science Publishing. He's also a fellow at the MIT Connection Science Group since 2021 and one of the 7 global directors of MIT Media's Lab City Science Group. He was on MIT Technology Review Global TR35 list 2012 and Canada's top 40 under 40 2017. Extremely impressive.
Thanks, Nnamdi.
Extremely impressive. So, today's topic, navigating AI adoption in banking and strategies. Obviously you're a university professor based on your bio and stuff. Before we get into the banking aspect, can you help the audience with just a high-level overview of what AI is?
So in a nutshell, AI is understanding the patterns of data. It's basically started with statistics, understanding patterns, understanding relationships between data and data points. So at its best, it's basically understanding the patterns of data and then augment that with a set of algorithms and capabilities to figure out what to do with those patterns. There are things that AI is very good at, especially regurgitating the past, and that has been more or less what the AI literature looked like up until about 5 to 6 years ago. Not necessarily because we did not have the foundations, but we did not really have the technology and the user base to really go beyond that. But as the size of data increased, as computational power became more available, storage of the data became more cost effective, then we started to see the additional value of AI, which is more what we now call generative, ability to, of course, learn from the past, but also come up with recommendations and models that perhaps we have not thought about. The unique thing about AI is also it's dependent on data. AI without data is meaningless. You need to have enough data in order to showcase the value of AI. And there's no one thing as AI. There are different subsets and substreams of what AI is. We have machine learning. We have different types of learning, supervised, unsupervised. And even under the umbrella of machine learning, you have about 50 different ways of leveraging machine learning. So when people say AI, one thing that both at Flybits and also in my academic work we're trying to do is that there's no such a thing as AI. There are so many different ways that you can use mathematical models, statistical models, language models to understand the pattern of data and do something useful with it.
I mean, thank you for the explanation. I have to admit, right? In preparation for this show, I was looking at some of your past work, some of your past videos online at a TEDx event that you did. And I love this quote, and I want you to get into this quote for me because I think it's relevant to our discussion on banking. You said, before spending billions of dollars on AI, invest in your data strategy. And I think a lot of people or a lot of companies now, I mean, because, AI is the new hot topic. You're a startup, you have some type of AI functionality, you're going to get funding, right? But I want you to get into that quote for the audience and what that means. It's obvious what it means, but I want you to drill into that quote.
Let me start with an analogy. So go back to 2008 when Steve Jobs announced Apple App Store for iPhone. I was actually there at Moscone Center when he announced that. And back then, I could be an entrepreneur. I could have an iPhone, a Mac machine in my basement. I could build and design a game. I could launch it on App Store. And if I were lucky and perhaps did a good job, I could have made millions of dollars because I had no dependency on external data. It was just UI, controllers, views, logic, and algorithms. Now, fast forward to today. If I am an AI entrepreneur, and if I go and build the next best generative AI algorithm, without having access to data, I have nothing. And that's a fundamental difference because AI and data go hand in hand. Again, what I said at the beginning, AI is essentially understanding the patterns of data. So you have no idea how many frustrated entrepreneurs that I see that they are like, oh, we have built this amazing thing, but no one gives us the data, especially in the B2B space. Well, of course, they should not give you the data because data is sensitive. Sometimes they have privacy information in them. It can be misused. So in addition of innovating around AI, which are essentially algorithms and techniques and clustering tools and all that, people should understand the physics of data itself, the portability, where it's coming from, who owns it, what legal contracts it comes with. And if they go hand in hand, then you can have an ecological view or an ecosystem view to build sustainable and scalable AI applications. So what I always say is, before doing anything with AI, and depending on what type of AI you want to use, really figure out your data ecology and data ecosystems. Because especially in the enterprise sector that we do a lot of work at Flybits, data is not in one location. The data comes with all sort of contracts. Some of them are coming from mainframes, from CRMs, from file systems, object systems. Some of them are coming from outside. And the physics and the speed of data is as such that every day you have maybe gigabytes, zettabytes, terabytes of data becoming available. Well, how do you handle that in such a complex environment? So when you think about orchestration, modeling, portability, audit, provenance, and all of that, that allows you to build a sustainable data strategy. When you have that, then you can do with it. It's basically saying AI without data is basically having a car that cannot run on gas or electrical motor, just there, doesn't move, right? So that's basically the analogy that we talked about, that data and AI will need to go hand in hand, and there has to be a scalable view of looking at both of them in a unified system.
Like what you said regarding the frustrated entrepreneurs who built this algorithm, but because they don't have access to data, it's useless. So it sounds like the first investment should be in data. It should be in how are you collecting it, who are you collecting it from, the privacy issues around that. That whole strategy is your baseline.
Absolutely, and depending on what type of application you're building. If you're building an enabling tool that basically allows people to model data, essentially an AI tool, right? That allows you to model data, clean the data, feed the data, model the data, pre-train, train. That you may not need the data, but that's a tool, right? That's a very different way of building an AI company. That's basically a tooling company that it provides its capabilities to others to leverage data and then advance their AI capabilities. That's very different. If you're building an application or a service or a tool that is more consumer facing, the language is B2C or business to consumer service, and you're dealing with consumers' data, that also has a very different paradigm in terms of how you use the data. Whose data? How do you bring transparency, privacy preservation, consent, things such as right to be forgotten, to really bring comfort to the end user to share the data with you? Because people are becoming more and more aware on the power and the value and the sensitivity and the risk of their personal data. So as a new company, as a new entrepreneur, in addition of bragging about the amazingness of your AI, you should really tell the user why they should trust you. And another buzzword of the day is trustworthy AI or trusted AI. Trust is not something that you can define in digital or data. Trust comes between people, right? So what do you do from a design perspective, from the legal perspective, from a transparency perspective, that consumers are willing to share their data with you? And what guarantees do you give them that if something goes wrong or if they're not comfortable, they can delink or remove their data? And the last thing is, well, if you're building a business to business company, a lot of people want to build foundation models or large language models. That's a very expensive venture to start with because it needs a lot of compute power, a lot of data, a lot of processing. Whereas a lot of the great B2B AI companies that I see is that they have a niche. So they have AI capabilities. They apply it in the legal sector, somewhere that their passion is, legal, music, fashion, whatever. Bring the two together, bring the talents together, AI and that subject matter expertise, and fine-tune these foundation models or interface with these foundation models to bring a very unique and niche value proposition to the market. And that's usually a good recipe for success if you're an AI entrepreneur trying to build a business-to-business value proposition.
I mean, if you think about it, to go along with what you're saying, they always say the riches are in the niches. So in this case, right, even if you're looking at it from a pure business plane marketing, you can't market to the world. Like, what's your niche and then expand from there. Even a company like Facebook, right? They started for Ivy League universities, expanded to colleges, and now everyone's using it, but they started with the niche. So even with that whole concept with what you're saying with AI, if you try to boil the ocean and collect all this data outside of various verticals, it's going to be extremely difficult and expensive. But if we target in, like in terms of, we're going to focus on this vertical, but within this vertical, this particular subset, and we're going to collect data there and then build our AI models around that. Something we always give to the audience, we have a comment. Gary, he's saying, I 100% agree. Everything starts with data. Appreciate you, Gary, for watching in your comment. And to just be a fan of your work, I'm gonna drop another quote, and I want you to go into it. You said data is an asset class and trust is a currency. Mm-hmm. Break that down for us.
So if you think about the future economy, right? The economy that we saw and advanced and evolved after the post-industrial revolution, kind of the core unit of the economy was financial data, currency, dollars, right? And we really figured out a way how to use it correctly. Like, for example, if I get my paycheck, I trust the bank, I allow that paycheck to be deposited in my checking account, and I understand the legality of a checking account. It's securitized. I can move it into a savings account, but the legalities are different. But now we really figured out a way, the symbiosis between us, financial institutions, government, our employees, tax, and all of that as an ecosystem that allows us to manage financial assets effectively, whether individual assets or corporate assets. Now, think about the future economy, which we can also have data as an asset, right? If you see what we have done in the past 25 to 30 years, if you go back to 25 years, 30 years, maybe some of your audience are not even born there. it was unfathomable to think about a Zoom call that number of us are in different parts of the world and having an HD multi-point video conferencing. It's like, wow, this is like magic. It was only reserved for some very unique research labs in the world. Now we take that for granted. So I use that example to say that we have built a very strong communication medium for the world that is amazing and known as the internet. What we don't have on top of that is what I called a trust and a transaction medium. And let's remove the buzzwords. A couple of years ago, IoT is the next big thing. Well, sure, that instrumentation that allows us to collect more data, which is great. That's part of this transaction spectrum. 2 years ago, 3 years ago, blockchain is going to change the world. Bitcoin, like, that basically, if you remove all the buzz around that really allowed us to understand how to protect data in a decentralized way, in a more trusted way, among groups of people rather than relying on centralized systems. And now with Gen AI, we have the ability to really look at a lot of that data, centralized or decentralized, and come up with new suggestions. Now, connect them all together. You can see that we are in the process of forming a very interesting trust and transaction medium on top of that communication medium. So when I say data is an asset class, data has a lot of value. It's very valuable. Your personal data is valuable. It can be mined, it can be modeled, it should not be misused, but you can make money out of it, right? Nothing prevents you to really lend your data and turn it into a model of expertise so people can actually consult your personalized model, Nnamdi, if they encounter a subject that we feel that you're an expert of, right? In the past, you just gave up the rights of your data. I don't want to mention a company, but think about all those T's and C's that you scroll, you said accept, you don't own that data anymore. We think you should. If you think about a corporation, a bank, a healthcare organization, an insurance company, a media company, they have a lot of data. That's an asset. That's an asset in which if you mine and model and manage and provide audit into that, that can actually create a lot of value, monetary value, and customer value for you. So learn how to use them, learn how to not just, lock them, but what are the best ways to generate value out of them? And that's what I mean by data as an asset class. So the work that we do at MIT, I use the analogy of finance. I told you about the checking account and money. Think about that you have different data repositories that you can say, you know what? This data that belongs to me, I want to put it in a data account that is completely locked and only 2 people have access to it. But I have very fluid accounts that I'm okay to put some of my personal data in it and it's public, but when people query it, I want to make some money or I want to generate some tokens from that. So we can learn a lot from what we did with financial assets and applying it to data assets. Now, currency is the trust. When people just throw these words, trusted AI, trust my AI, that's very, very discouraging. Trust is something that is defined between people, and companies are people. I actually believe that there has to be zero trust between systems, between digital repositories, and trust should be something that is being given as a power to users to control and activate. Some people call it consent. Some people call it explainability and auditability. And this is what I call in my research human AI systems or human-centered AI. I am controlling who can see what, and I trust this system to be able to manage that for me. But I'm not delegating all my trust to a system. And the last thing, which I think your audience mentioned, is AI as the economy. So if you look at data as an asset class, trust as the currency, AI and physics around that has the power to really allow, it can allow you to generate an economy out of that in an effective and auditable fashion.
I have to admit, I'd never heard it put that way. wildly fascinating. And it makes sense if you look at it from what we talked about earlier in terms of understanding your data strategy. Because if you're just building an AI platform without the data, as we mentioned, is useless. So that data has value. So
Yep.
now you're talking about it, that data becomes the asset class. So in the future, it's interesting business models that could be generated based on what you're saying in terms of trust being the currency and the data being the asset and how you allocate that. And then
Yep.
if we are looking at it from a company perspective, and I want to get and gather all this data as my foundational, how much is that worth to me, right? How much am I willing to pay for it? Then do you even trust me with that data from a consumer side? How can I prove my trust? What things can I do? So when looking at it, how you just described it, very, very interesting. I know we're gonna kind of switch modes. I wanted to start off with that foundation, and I think that that was a good foundation. Now we're getting into the topic. What initially sparked your interest in terms of integrating AI into the banking solutions at Flybits?
So I did my master's in the AI space and applied it to the healthcare sector. So I'm originally from Canada, based in Ontario. My thesis work was to apply AI on health data and allowing general practitioners in rural parts of Canada to be able to diagnose specialized diseases in cardiology. So think about it, that someone with a very specific issue related to a specific area of medicine, like cardiology, comes to a general practitioner. The general practitioner has some ideas about the symptoms, subjective analysis, objective analysis, but it's very difficult for that general practitioner or family doctor to really pinpoint what's wrong with you from a cardiac perspective. And the cardiologist in that rural part of Canada is not available. So we built a system that was incorporated in the EMR system, the electronic medical record systems of Ontario, that while the general practitioner was using the system, the AI helped to really reduce the hypotheses of the diagnosis. And when the GP came with the conclusion, it measured the risk of misdiagnosis. So it didn't tell the GP what the disease is. It was still a human-centered decision-making, but the system told the GP that you're making this decision or diagnosis with X amount of risk. So the doctor used the system until it could reduce the risk to a level that was understandable. It was used for audit. It helped people. So that's basically how I started with AI. And I had some amazing supervisors from around the world that helped me with that. Now, when I started my PhD, interestingly enough, they said, hey, AI is just for labs and it's not really in the market now. Maybe you should do something else. So I used a bit of AI, but this was a time that mobile applications were becoming very big. Like this is just before iPhone and Android, if people remember Symbian and Nokia days. So I became very interested in applying AI in mobile social networking. So that was basically the base of my PhD. When I finished my doctoral studies, I wanted to spin off part of that technology into a company called Flybits, zeros and ones that would fly. That's where the name came from. And interestingly enough, when we raised our Series A verbatim, and that was almost 10 years ago, 10 years ago, I vividly remember the VC said, please do not call your company an AI company. You're not going to get funded. Fast forward to 10 years, you just need a .ai domain and your valuation changes. So we have been using AI for a very long time, but we never called it, oh, this is AI, because there are so many things that you need to put in a system for AI to work. So we did a lot of work in data, context, synthesis, modeling, and all of that. And that became the basis of Flybits. And the last thing I say, which is very different than which is different in AI compared to when I started. This is the very first time. So if you go back to about 2 years ago, November of 2021, this is the very first time in the history of AI that you have millions, if not billions of users surrounding AI models and making it better and better because of the advent of GPT and now other models like Gemini, Gemma, Cohere, and others. We did not have in the past. So I remember when I had to train my medical models, I had a very powerful Dell machines. I had to let the models run for training, leave, come back tomorrow morning, and then, I had them available. Now, you have billions of people making these models better. You have TPUs and GPUs making it almost instantly for you to generate that. So the combination of those is actually making AI a big, real thing. The foundation of AI that we see today, many of them are not new. It started with Marvin Minsky in almost 60 years ago at MIT. The foundations were there, but we never had this network effect that we have right now back then. That's why it was very reserved for very unique and well-capitalized organizations to use it. But now, although AI has had winters and summers, this is a summer, and I think this summer will take a very long time. But I also think there will be a winter because of the lack of literacy on how best to use it in a privacy-preserved fashion, and then it will be right-sized again. And that's my personal view.
So in terms of it was a stat that I saw that 80% of banks are leveraging AI. How do you do it in your company in terms of what are some of the strategies that banks are using that you've worked with in terms of integrating AI?
We have a 5-pillar framework that we share with banks. And we are spending a lot of time with boards of banks, large and small, with C-suites. And interestingly enough, they have a very different view on what AI is and is not. So the number one thing that we tell banks is first develop literacy. Develop literacy for your board of directors, for your C-suites, for your CEO, all the way to the working level on what AI is and is not. It's very different than data analytics and business analytics. It has a very different physics to it. So number one is literacy. Educate people on what AI is and is not. And then really figure out what type of AI is useful for your company. Because when I talked about machine learning, and if you think about 55, 60 different ways to do machine learning, well, what do you want to do with it? Do you want to assess risk for EKYC purposes? Do you want to upsell for upsell products to ultra high networks? These require very different models, right? So it's not, I need AI, but what type of AI to do what? And this is a mistake that I have seen many banks did number of times. Oh God, our competitors are using AI. Board of directors go to the CEO, please bring some AI. CEO goes to the CTO, bring some AI, and they buy and procure these monolithic solutions. They do something and they're like, to do what? Or they go and buy companies and try to act as a research lab, and they figure out, why did we buy this company, right? Do we actually need this type of AI? Or we need an orchestration of our infrastructure that we can plug in different AI capabilities to be able to figure out what model to use for what purpose. So literacy. Second thing is looking at the organization. Team, people. You really need to invest people and have the right people in place to be able to make the right decisions on AI. Now, I believe that very soon, it's interesting that in the past, I'm on a board of a bank and I work a lot with boards. Usually when you think about succession planning, which is one of the key priorities for the board of the bank to think about any CEO, usually the CFO was the successor if something happened to the CEO. So usually bank CEOs came from the finance and the legal background. It's very interesting that a lot of our succession planning is now considering the chief technology officer or someone with a technology background, because we believe AI and what it can do for a bank is so fundamental that it has to become part of the OKR for the CEO. It's no longer an IT project. AI can no longer be seen as a siloed IT project. It's a horizontal fabric in the organization of a bank. Well, how do you go about that? How do you think about the training and the upskilling of your executive staff or the search firms that you work with, all of that? That's the second thing. The third thing that we talked about is data, right? If you're a bank embarking on an AI strategy, really think about your data ecosystem and data ecology. You have hundreds of systems, some of them old, some of them new. You have new procurements happening. You have data coming from outside the bank, from credit scores and loyalty and EKYC. What is the fundamental technology that you have that really allows you to build this, what I call the solar system of models and AI that you can orchestrate? Figure that out first. And then, sure, you can build some stuff internally, but banks are not software engineering firms. When I talk to architects or CTOs, oh, we are going to build everything ourselves. That's, in most cases, it's a recipe for disaster. Build an architecture that allows you to plug in the best of the best in your infrastructure and own the orchestration and the conducting of these models and data, rather than trying to build everything yourself. Because there's no way for a bank to be able to compete with a tech company because that's not their DNA. There are some exceptions, like some of the very advanced and largest banks in the world that can do that. But usually it's the best practice to partner, but own the orchestration. Never give up the orchestration capabilities of your bank's data to a vendor. That's something that I would say a CTO's office should think about. And the last thing I say is AI, because I said it's no longer an IT project, you require very multidisciplinary teams. You need people from design, compliance, business expertise, and AI and technology to come together and act as a product team to bring these capabilities to the market. I always joke that you should be able to feed that team with a large pizza, not more than that. And even it's, for example, if you think about design, think about how banks design their consumer-facing channels, websites, apps. Okay, let's do prototyping. Let's put UX in place. Let's go from low fidelity to high fidelity, whether we do it with an agency or internally. Let's do A/B testing and then launch something. You can't do that with AI because you no longer have that prescriptive authority on your channels. You just need to throw a bunch of data to your digital channel and hoping that it follows the regulation and everything and it shows something useful to the user. How do you design for that? What type of a design talent do you need in your bank to do that? I get very frustrated when banks go procure or buy companies that are doing A/B testing and call them an AI company. No, that's a fundamental paradigm shift if you want to build user interfaces in banking based on AI. And that's why I said you need to really rethink interdisciplinary teams when you're envisioning your AI strategy.
Love it. And I want to kind of drill down on some aspects of that 5-point model. Number one, the challenge of upskilling the CEO.
Mm-hmm.
So what you're saying is, you're seeing succession planning. Historically, CFO, someone from finance, eventually becomes a CEO. Now, the estimate is in the future, if we look at 10 years out, that role will probably be the CTO and so forth.
Yeah.
The question I have, right, because you also mentioned having the CEO start to learn AI. From outside looking in, and most people, they don't understand this stuff. It's very complicated.
Yeah.
You're coming from, even before we talked about cybersecurity, that was something that everybody had to kind of start learning. That was a shift. Now with AI coming on board, what is the recommendation for that individual, that CEO, to start getting a better understanding of AI, right? They're not necessarily going to be modeling it, right? On that level, what's your recommendation approach in terms of learning and understanding?
I think you need to have a curious CEO who is very open to change and come up with a mindset of both vulnerability and also curiosity and discovery to say, listen, there are things that we don't know, and we are going to invest We're going to bring our groups together and we are going to figure it out. I have seen that in some banks that I cannot mention the names, but it was fascinating for me how the CEO and the whole executives came to us and said, show us, what are we going to do? But this mindset of curiosity, which again is a fantastic thing in any entrepreneurship, doesn't mean necessarily you're a small entrepreneur, the entrepreneurial mindset that there is something coming and we are proactive and we have the far side to really learn it, is fantastic for a bank to have. That doesn't mean your CEO is an AI expert, but your CEO is very good in understanding the upcoming risk and the opportunities and can rally up the team, whether inside the bank and in collaboration with research labs and experts and professors, to say, how do we envision the future? And really rally the team behind that. I have seen CEOs like that, and it was fantastic. It was really good to see that. I have also seen CEOs who are like, yeah, I'll pass it on to my CTO, and we built some nice stories as a press release and for the board. And I am worried for those banks, right? Because this is, if you mention any unit of a bank, I can tell you how AI is going to change it. Not necessarily for worse. People still can maintain their jobs, but there is a role for HR and upskilling. How people will become augmented with AI. Is it underwriting as a service? You can do so many things in lending with AI to really facilitate that process. You can do so many things in eKYC. You can do so many things in portfolio management. You can do so many things in personalization and retail banking. Now, this is going to shift how a bank operates, how a bank manages its cost and bottom line, how the bank is thinking about its top line and a 5-year to 10-year strategic plans. That is the job of the CEO. And that is the job of a board who says, listen, there is this seismic shift coming towards us. How do we prepare for that? So that's kind of how I think about it. And in a nutshell, I would say you don't need to have a CEO who is an AI expert, but you need to have curious, entrepreneurial, to some extent vulnerable in a positive way as a leadership trait, so that they can embrace the change and not resist.
Next question. You mentioned the orchestration. So the bank should own the architecture itself, not necessarily the components of, like, they built the model internally or so forth, but they understand how everything connects. Can you just go in on that, please?
Yeah. So what I call this is that it's think about a solar system, like the orbits, right? Think about your bank in the middle as the sun, right? Now the bank in the middle. And then you're going to have 3 orbits around that bank. The first orbit are your very proprietary, sensitive models, which the bank should build on its own. These are what I call tiny models, or very specific models based on the bank's data, right? And it could be a fuzzy model, it could be a Bayesian model, it could be a language model, it could be a symbolic model, but a good CTO will put those models internal and protected and lock it. Then the second orbit will be very niche and unique partners or startups that are doing one thing very well. So a model that is great for underwriting, a model that is great for eKYC, a model that is great for, risk assessment. You put that on the second orbit. And on the third orbit, you will put very large language models or foundation models. This could be Gemini and GPT and others. Now, instead of the bank moving the data all the way to these foundation models, which is super dangerous, you now have the orchestration and the physics in your solar system that these models will work very effectively together through orchestration protocols, right? For example, do not share the data, but gain policies for models to ask each other questions, right? Get the decision, but remove the data. This physics of this AI solar system should be owned by the bank. And it's going to determine which banks will be successful with their AI strategy and which ones are not going to be successful. That's what I mean by orchestration, to really have a framework, a deployment model, audit, right? The biggest challenge, I mean, you saw that it's in the news, like the New York Times and OpenAI, right? Think about a regulated industry. You cannot just share people's data with a black box model. You will get sued left and right. Now, do you want to benefit from all the great things that a large language model, a closed large language model provides? Of course. But now there are techniques to interface between tiny models and large models without moving the data. And it goes back to our first conversation that figure out data protocols and data transparency and data audit before you embark on the topology design for your AI infrastructure. This way, AI at the moment is at its infancy, despite everything that we hear. Now, every month there is something new. How do you build an orchestration engine that as new things become available, you plug them as a service rather than, oh my God, now I need to spend $100 million to rebuild my infrastructure to be able to benefit from that service? And that's what I mean by an orchestration architecture in a bank.
Extremely fascinating, because I like the approach. The approach in terms of how you lay it out. It's not necessarily prescriptive. So it's like, okay, we can take the approach and adopt it in into our environment the best way we see fit. That's why I really like it. I can go on and talk to you about this stuff because it fascinates me. I feel like I'm an audience member who gets to ask questions unlike others. But I want to now kind of switch topics. I know we're getting close to the end, and I want to transition into, what inspires you?
Number of things. So I work with. I'm in a fortunate situation in the sense that I can work with some amazing students in a research lab and do discovery-based research and publish papers. But what really drives me is to not necessarily shelf those papers, but really figure out its impact in the world to bring better values for communities and societies. And because of the great mentors that I've had and the structures that I have been, I could do that at the same time. I could do research, but I could bring some of that to the market and kind of coexist. I share sometimes with my team that my dream one day is to create an HBO series about an entrepreneur that had to coexist in academia and a startup world at the same time, and the contrast. But that really drives me, seeing students and entrepreneurs and young entrepreneurs growing and become more confident and really become leaders in that space. That is so rewarding that I never want to give up. And when you see the result of your work in the market, that companies are doing better, people are doing better, people get promoted because they use your systems, those are very, very motivating. So I really like this spectrum to go from moonshot ideas, but really bring it all the way to creating impact for communities and societies. And I would love to kind of keep doing that, especially with my team and my students, and really see them, how they are really coming up with things that I never came up with. So that is very rewarding, and hopefully I don't want to give that up.
That's awesome. Speaking of one of your projects, like I said, I was doing some research. I saw this community data hub. It looked really interesting. Can you describe that?
Sure. So if you think about a city, and let's think about an urban place in North America, I'm sure you have seen bank branches. You can ask your audience when was the last time that they went to a bank branch. I think they are losing their prominence, but these are beautiful, amazing real estates, right? So with the technology with AI technologies like federated learning and blockchain, we came up with a model that what if we can turn a bank branch into a local data repository for a neighborhood? So we don't move that data outside the neighborhood, but we collect data based on what households want to share with us, small businesses want to share with us, local administrators want to share with us, and we store that locally on a blockchain ledger on the community level. Then we do federated learning on that, and then we can do things such as a local member of this neighborhood, you can go and invest in your local coffee shop. So we bring neighborhoods to help small businesses thrive. Or we bring parents together to say, hey, these are the anonymized K-12 performance of our students. How do we really come together to help kids with their education? So it's really demonstrating the power of AI and data to gray out industries. You use a bank, you use data, but you also bring communities together to thrive, especially post-COVID. The reason we started this was small businesses were really suffering on the neighborhood level. So we thought if we build a model using tokenization that local people can invest and get preferential treatments in having the ability to invest in their local businesses on a decentralized and distributed fashion, then communities can thrive. And then communities can compete with each other. Which community is doing better in terms of recycling, access to parks, and others. And now, as part of our research plan, as part of our City Science Network at MIT, we are seeing, okay, if you create these competitions between neighborhoods, then you can include things such as tax regimes and all that the government or the municipality reward communities that are doing better in terms of, okay, they take more public transit or they recycle more. So it's basically allowing data and AI and decentralization and privacy preservation to come together to connect people in a community and communities to each other to understand each other better.
Extremely fascinating. Last question on this. You mentioned the data is decentralized. So all of this is on a ledger.
Yep.
Using blockchain technology. Yeah, very, very interesting.
In this particular project, yes, because one concern we got from communities is that they want to have full control and transparency and audit on a local level. They do not want that data to go and sit, let's say, on a Google repository or a black box AWS repository. So we are doing these on a local ledgers, which is managed by the trusted members of the community. Similar to how co-ops used to work in the US, they are protecting the rights of the members on a community level using data.
There's so many questions that I have on this, but I don't think we have enough time. And I want to be respectful of your time. One of the things that we do, we do for our guests, I'm going to give you the floor to talk about how people can find you, what you're doing at Flybits, or anything you want to share about your research. So I'm going to give you the floor right now to do that.
Yeah, Nnamdi, first of all, thank you so much for inviting me. Really enjoyed our conversation. We'll be more than happy to stay in touch with your audience. We are always looking for feedback. If you want to collaborate with us with some of our MIT projects, you can email me. My email is my last name, Rahnama @mit.edu. And on Flybits, if you're a bank, if you're an organization that is looking for your data strategy, for personalization strategy, want to rethink, how you engage with your customers, you're interested in forming alliances between a bank and other entities like loyalty, telecom, and others, Flybits is a unique technology that can help you. And I'm more than happy to connect you with my team. So feel free to send me an email, rahnama@mit.edu. And whether you're interested in research, you're an entrepreneur, or you want to know more about Flybits, I will connect you to the right people accordingly. So yeah, thanks for having me, and thank you for joining us on this great podcast series.
Once again, saying thank you very much for your time today. Very informative. I thoroughly enjoyed the show. I felt I'm actually in a PhD program, so I felt like a student in the back row asking a bunch of questions. So I loved it today. For everyone else, thank you very much for joining Tech Behind FinTech. We really appreciate you. All my people on Instagram, LinkedIn, Facebook, YouTube, and Twitch, thank you for joining. Thanks for the comments. Also, join us live every Friday, 12 p.m. Eastern. If you have not already, go to Tech Behind FinTech and please subscribe so you can not miss a beat and be aware of the upcoming shows and so forth. Once again, thank you very much. I wish everyone a happy weekend.
Thanks, Nnamdi. Take care. Bye. Bye.
Understanding the technology that powers the money is essential. Knowing the business drivers that inspire how the money is made is crucial. Bridging the gap between the mind of the technologist and the mind of the business is monumental. That is what TBF is all about. Let's start this never-ending conversation. It's time.